India's airline industry is showing little enthusiasm for taking over the more than 700 flight slots vacated by IndiGo after regulatory action by the aviation watchdog DGCA. While the government has offered these slots to rival carriers, industry executives say the proposal makes little commercial sense, primarily because the slots may be available for just 1 month. According to senior executives from Air India, SpiceJet and Akasa Air, such a short window is simply not viable for launching new routes or expanding existing operations. Starting a new flight involves aircraft deployment, crew scheduling, regulatory approvals, marketing, and ticket sales, all of which require long-term certainty, not a temporary arrangement. IndiGo, India's largest airline, vacated 717 domestic airport slots after the Directorate General of Civil Aviation curtailed its winter schedule by 10%. The decision came after massive operational disruptions in early December, including delays, cancellations, and passenger complaints that put intense pressure on the airline and regulators alike. For the winter schedule of 2025-26, IndiGo had been permitted to operate 15,014 flights per week, which translates to 2,144 flights per day. The DGCA's intervention forced a cutback, freeing up hundreds of slots at busy domestic airports. However, instead of triggering aggressive competition, the move has been met with caution. Airline executives argue that 1 month is not enough to make any route commercially viable. Aircraft induction alone can take weeks, and airlines risk losses if they are forced to withdraw flights just as passenger demand begins to build. There's also uncertainty over whether the slots would be extended or withdrawn again. Adding to the complexity is the fact that many of these slots are at high-density airports, where operating costs are already high. Without long-term slot assurance, airlines say the risk far outweighs the reward. Meanwhile, IndiGo's troubles have also spilled into the legal arena. The Delhi High Court has stepped in, directing the airline to comply strictly with passenger protection norms. Beyond refunding fares for delayed or cancelled flights, the court has reiterated that compensation must be paid in monetary form, not vouchers or future credits. This has reopened a wider debate on civil aviation rules and passenger rights in India. Current regulations mandate airlines to compensate passengers for delays, cancellations, and denied boarding, depending on the duration and circumstances. Consumer groups argue enforcement remains weak, especially during peak travel disruptions. For now, the government's proposal to redistribute IndiGo's vacated slots appears unlikely to take off. Rival airlines are signaling that unless the slots are offered for a longer, guaranteed period, they would rather focus on stabilizing their own operations than gamble on short-term capacity gains. The episode underlines a larger issue in India's fast-growing aviation market. Growth without stability can quickly turn into disruption. As regulators tighten oversight and airlines grapple with operational pressures, passengers remain caught in the middle, hoping that accountability finally translates into better service.